and we are all not financial advisors.
Something I'm coming to realize is that I didn't realize that if you look like how interconnected the markets are, even between crypto and stock market, and then
Okay, can you guys hear me?
Yes.
Okay, I tried something and it just did not work.
real quick, I'll just finish this thought. It's how interconnected that the markets can be between crypto and also stock market, and that you can, if you can pinpoint and actually put down what moves when it moves, and you can actually start connecting those things. It's actually like quite amazing to see somebody that sees that actually be able to do that. It's like a conductor for a freaking orchestra. It's so weird yet very satisfying.
I do have a question, and Nate, you can probably answer it. Maybe.
Yeah, go ahead.
So that article that Mouse posted about the repo market and the Fed, how is that going to affect the squeeze and the rest of the market, small caps included, for the rest of the summer?
Wait, say that for me one more time, because there was
So that article,
to say something.
yeah, and it's a very broad question, and the reason it's broad is because I don't know that I truly understand it, but it concerns me. So that article that Mouse posted about the repo market and it, being flooded and all of that, I don't know if you read it. I hope you did. Otherwise, I'm gonna have to be smarter. Okay, good. Thank God. So how is that going to affect this squeeze that we were all impatiently waiting for, and also the rest of the market for the summer, especially including the small caps?
Well, the small caps are going to hurt the worst. I don't think it's good. I mean, I personally don't think it's good. I think that, like, you know, people are trying to recover in a recovery rally, and this kind of dampens the mood. It's like, we've got money trying to come back into the market, and I feel like this, I didn't like hearing about it personally. Um, we use the term FUD. This is more than FUD, right? So this isn't just a fear tactic. Like, this is, I mean, it's going to be used as FUD, but in reality, this is also a reality, right? So
Right, right.
this is a problem. Like, this is a real problem. This isn't just like an editorial. You know what I'm saying?
Yeah, 100%. That's why I felt more concerned about it than I normally do when I read an article of that type.
Well, what we're going to have to watch out for is bull traps ultimately as investors, because that's what this is going to create. Um, because some people are going to have fear, and some people are going to panic, and some people are going to sell off of this news, especially in the regular market. Um, and then you're going to see recovery. But the problem is that really recovery, or is that a bull trap? And that's what I mean. We're going to have to watch out for potential bull traps in the market. So, like for me, and I've explained this before, like I don't just go all in when I think it's a bottom, because the way I trade, and everybody trades differently, so you really need to explore into yourself, and this is what Mouse talks about a lot too, like know yourself, right? Know thyself. Know how you trade. For me, I always call the bottom early because I'm optimistic, right? I want to see it go back up. So I'm like, oh, this is the bottom. This is the bottom, right? But I'm always early. And I know that because I've analyzed myself and I've analyzed my trades. And by going back and looking at my trades, going, man, I am always early on the bottom. So what have I put into place to mitigate that? Well, I do an 80-20 rule, or I will do like a 30-30-40 rule. And basically, what that does is that when I think for the first time that there's a bottom, I only allow myself to put in 20% of my pot like the amount, my bag that I'm willing to put into this instead of it just going in at that one price point. um I will do like 20%. And see, that way if it keeps going, then I don't feel bad and I go, oh yep, I'm early as always, because that's the way I trade. And then I can do like another 40 and see if it's going to go a little bit more if I as I feel more confident, right? And then I can do my last bit. Now, let's say it goes up. Well, that's cool. At least I got 20% in at the bottom.
Right. You're catching on the way up instead of on the way down. Yeah.
Right. And now you've got some people that don't even do that. You've got some people that will literally wait like a percentage of it coming up. They don't want the bottom. They're willing to lose on the bottom with confidence that it's already on the way back up. Like we ask people all the time, like, who would buy at this? Who would buy why it's going up? Well, before the FOMO kicks in, it's the very, 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 very conservative investors. They're the ones that only buy a rising plane, right? They don't buy the plane on the ground that's about to take off. They only get the plane once it's in the air. And that's just a type of investor. And it's nothing against those type of investors. It's just knowing what type of investor you are and then analyzing it and making adjustments to benefit yourself in the future.
And I think I could be that kind of investor now, standing back, 4 years later, looking at the choices that I've made, and I get that. But with this particular news, I'm not gonna lie, like I saw that and I'm like, maybe I should start exiting out of 100% of my small caps and then just start looking for a safety plan.
And see, that's where you have to analyze yourself in the situation too and say, am I falling into that fear, uncertainty, and doubt? Right? See, this is
Well, but to be honest with you, every summer kind of sucks with small caps anyway. So if you got in the spring on small caps, you're usually holding until the end of August. And if that news is any indication, the summer might actually be a little worse than that.
now we're talking about the real market, right?
Yeah, I'm not talking about crypto.
Okay. I just want to make sure, because while similar, they are two totally different animals.
100%.
So here's the thing, though. This year, normally, yes, you're 110% correct. However, well, except for last year, because last year was COVID, right? But this year is also different because you've got a lot of bulls that are trying to come in. Well, they want to come in. That's the thing. They haven't come in yet. We're there. We can start to kind of see it, but they haven't really committed yet. And see, that's the difference. And a lot of it has to do with inflation, which is also fear, uncertainty, and doubt. A lot of it has to do with the fact I like Jerome Powell. I do. I just don't think he's been forceful enough when he's come out and say, hey, listen, we're not moving the goalpost. Like, period. I know he's come out and actually said that, but I don't think he's like been.
Yeah, but they're pushing it now with this last article. They're 100% pushing that.
Well, they are, but at the same time, it's still like, is the market going to believe it? Because see, Mouse and I were really happy, not this past time he talked, but the time before that. I know he's talked a lot recently, so it's hard to keep up, but it was like 2 times ago. And Mouse and I were really happy because he came out and said a lot of things that Mouse and I wanted him to say verbally, like say it out loud, right? The problem is the market didn't believe him. It's like, okay, so is the market going to believe him this time? And I think it's not just about saying it. You have to attain the confidence of the market, right? Because that's what the bulls want to hear. So we gotta tap dance for the bulls, you know, and then those of us, the little guys, can ride on the piggybacks of the bulls, hopefully, you know. But this
I mean, it doesn't really seem to matter what he says. They always they pick it apart that he's the president. I mean,
well,
every,
okay,
every time.
right. Well, that's because here's the other thing too. They didn't want him to say what he said the last two times. See, there are a lot of big hedge firms that were betting that he was going to come out and say that they were going to move the goalpost up, right? And so when he didn't, they were like, "Oh shit!" So now
Now what?
they got to influence the markets in the direction that they bet, right? Retail, we don't move markets, like period. We don't.
No, but you know what? You're 100% right about that because, like the news stories ahead of his speaking, they always completely flip flop. Like right after he speaks, like inflation isn't going to be a problem. Jerome Powell speaks, inflation is a huge problem. I mean, they literally flip flop it.
Yeah, because they thought he was going to say one thing and they bet on the fact that he was going to say one thing and then he didn't. Well, they're not going to lose billions of dollars, so they still need the market to act like they wanted it to, even though Jerome didn't. So that's what I'm saying. Like this time, it's like, you know, are we at the point where they're going to let Jerome Powell's words mean something? I guess is what I'm saying.
Do you think that he is overly optimistic?
Hey, not to interrupt you, I'm sorry. Real quick, Kata, hey, in case you didn't know, we're live on YouTube and the audio's fine.
Yep. Oh, 10-4. Okay, we can kill this conversation. Move on with the main event.
Okay,
Excuse
so this situation that we're in is something that has been happening since like the 80s when everything went digital onto a computer. And it all started with them having the ability to naked shorts. So what the market makers, hedge funds, investments, and big investment companies, whatever you want to call them, they figured out that they could sell on the market shares that didn't exist. So they're selling shares before they're buying them, which creates a phantom share in the market. And if they did this enough times, it caused that company that they were shorting to go out of business, which means the phantom shares no longer mattered. They never had to be accounted for. They never had to be bought back. They never had to be paid for because they were worthless. And as they figured out they could do this, they were making a ton of money by selling something that didn't exist. And so they were doing these naked shorts, and it's perfectly legal. It's not something that's illegal. However, it causes extreme price discrepancies on the stocks they do this to. So they were it's called a strategically fails to deliver. So they were strategically putting these shares, not having to account for them, and then driving companies out of business so they never had to pay these phantom shares back. So when DFV kind of did his analysis and kind of, figured some of this out and realized it was shorted more than 100%, which shouldn't be possible. You shouldn't be able to short more shares than they're on the market. Because when you short more shares than are on the market, that means you have to buy more shares than there physically are, which is impossible. But they've been doing it so long and making so much money by purposely putting good companies out of business And even if that company is a good company, when they get put out of business, they no longer have the ability to gain capital from selling shares, and they also can't get loans by leveraging their share price, which then decreases their credit score with no fault of their own, and it puts them out of business. So these hedge funds have been doing this for so long because they've made so much money at it that they're doing it so much that they've never been held accountable for it. They've never really caused a problem, that they kept doing it more and more and more and more. Well, with what GameStop happened is all of the retail float, which is what they are using to buy back and forth. When we all started buying that float up, they no longer had that float to buy and sell those phantom shares with. And with us not selling them, it makes it harder and harder and harder to do. And so they're creating more and more and more phantom shares by doing naked shorts. And eventually, they're going to have to cover all those shorts. So there's research out there that the data is anywhere from conservative numbers, 285 million to potentially 1 billion GME shares that are shorted on the market. Well, there's not even that many shares of GME to begin with. There's about 71 million, and they just added another 3.5 million. So what's that? 74.5 million shares. So if they've shorted 1 billion shares, when the GameStop hits a certain price, it's going to cause one of the smaller hedge funds to get margin called. When they get margin called, they're going to have to come up with the liquidity to cover their positions, or a computer algorithm is going to take over. When the computer algorithm takes over, the computer doesn't care if it's in the money, out of the money, a profit or loss. It's just going to liquidate the positions. So let's say, for example, if Melvin Capital gets liquidated, they're going to take all of their short positions and they're going to buy back those GameStop shares at whatever they can. So this is why it's important to not have stop losses in it, because that computer is just going to go hunt those stop losses because someone's willing to sell it for that price, which is not normal advice I would ever give anyone. But in this situation, that algo is going to take over and it's going to hunt for whatever someone's willing to sell at. And if the volume of, if everyone's holding and no one's selling, then that computer is just going to hunt for whatever it can buy it at whatever price, because it doesn't care. And then the same thing will happen to all of their other positions. So they hold Melvin Capital, for example, their largest position is Expedia. So it's going to take all their Expedia positions and it's going to sell them at whatever anyone wants to buy them at, and it doesn't care, and it's just going to liquidate that position as quickly as possible. So what they've been trying to do is they've been doing short ladder attacks to keep that price down artificially, to prevent that prevent them from getting margin called. So how that works is, say I have 100 shares and me and Neat are in the same position. So I'm going to take my 100 shares and sell them to Neat for 170. And then he's going to sell them back to me for 169. And then I'm going to sell them back to him for 168. And he's going to sell them back to me for 167. And that's artificially driving the price down, because we're just selling the same exact shares back and forth each other to get that price slightly lower and slightly lower and slightly lower. Because as that price gets lower, then your short positions are increasing in value. So that's why we've seen volume drop off significantly in the last couple weeks is because as us retail are holding that retail float, that's about 22 million retail float that we hold, we keep buying more of them and not selling. They have less and less and less shares that they can go back and forth with, back and forth with, back and forth with. So the other problem with all these phantom shares on the market, when GameStop decided to do the proxy vote is going to come up, and this is why it's very important. I don't know if the deadline passed on when you can vote, but if it hasn't, definitely vote. Because if that vote comes out as they had 1 billion GameStop votes, so people supposedly had 1 billion shares of GameStop right now, that is significantly different, or even 285 million, or even one share over what should be out there. That's pure market manipulation, because there can't be more shares on the market than were issued, and you can't have more people voting than what were issued either. So that's why the voting process on GameStop and AMC is super important, because we need to show that there are way more shares that we hold than were ever issued, which is going to force the supposedly SEC, DTC, whoever, to come in and evaluate why this is happening. So that's one catalyst that will kind of start to take the squeeze off. The other thing is that as this price slowly, and you can see from my screen share, if I ever cut out at all, guys, just yell at me. You can still hear me, right?
Yeah, you're doing good.
So this is the wedge. This is the wedge we've been seeing. Sorry, it got slightly off. Okay, so this is the wedge we've been seeing happen throughout the course of the last few months. Is we had this gamma squeeze right here, and this potentially had the ability to actually be the squeeze, but right here at the top, they prevented us from buying them. So we were no longer allowed to buy up here, which means that they could drop the price on us. And then they allowed buying back up, and it went back up, and then they did the same thing again. And then they came in, did short ladder attacks all the way down here, convinced everyone that the squeeze was already over. And then they got to the point right down here where they thought they were in the clear, and then right in here is when Keith DFV said I would still buy GameStop at 41, and everyone else continued to buy, and they had to do their short ladder attacks again here. And that's all they were doing, was buying back and forth to keep this price down. And when they stopped is when it spiked back up. And then they brought it all the way back down again. And then it's just every time they let up a little bit, it goes up, and then they bring it back down. Same thing. So we're getting lower highs and higher lows. And we've been in this pattern for a really long time. This right here is right after they dropped crypto, and then they brought it back down again. and we're seeing that same thing happen. So, kind of how the crypto market plays into this is you'll notice February 22nd is when they dropped crypto to get the liquidity. And then we had another slight gamma squeeze. Then they dropped crypto on the weekend, like right in here again, and we had the gamma squeeze again. And then this last time, they dropped crypto right here, and we should have had a bigger gamma squeeze here. But right in here, they also dropped Doge. So when those crypto drops happen, it gives them more liquidity to continue to do these ladder short attacks down to continue to drive the price down lower and lower and lower and lower. So every time we see a massive crypto drop, it's because they're using those positions to have more liquidity to take care of their short positions. And we see it time and time and time and time again. And we see more new every time. So especially like right in this area right here, there would be no news articles about GameStop right here, and then you'd see a bunch of them that oh, GameStop went down, and then it would slowly creep back up. No articles, and then it's like, oh, GameStop tanked. Oh, GameStop tanked again, and then nothing again, and then all of a sudden you see all these news articles, GameStop tanked. Like there's more articles on GameStop tanking, but how could it tank this much when you never reported on any of the times it had massive gains? So if they have 1 billion short positions that have to be accounted for, there's no possible way for them to buy them all back out of our $22 million float of the market we hold. It's impossible, which means that you can sell your share at whatever price you want, because the only way to stop it is to get them all taken care of. Now, if it was only shorted like say 20% and there was a squeeze, only 20% of the people would have to sell their shares before it would come back down to a normal price. But when you're at 100 or 200%, it's not even physically possible for them to buy all the shares, which is why it's being referred to as the mother of all short squeezes, or the infinite short squeeze. But how this is going to affect the market as a whole is once we get up here, especially around this 180 mark, because they try really, really, really hard to keep it under 180, especially on Friday. It's going to trigger the smaller hedge funds to get margin called, which means that that's going to buy the GameStop shares because the computer's going to take over, but it's also going to liquidate their other holdings to cover the losses, which is going to cause a small ripple with everything else dropping. And when that happens and the GameStop price goes up, it's going to cause the medium hedge funds that are at risk to be liquidated, and the same thing will happen. Computer will take over, computer will buy back all those shares, it'll make the price go up, and they'll liquidate all of their other positions, which will make all the other prices go down, which then will cause the larger hedge funds to get liquidated, which will drive the price up even more. And as the price gets drive up anymore, it's going to liquidate everything else. So you're going to see mass liquidations in really good companies because of the mass sell-offs, because they're over leveraged. They've been able to do this and make a ton of money at it without ever getting called out. And if they do, they just get a fine that was less than what they made. So you keep continuing to do it all over and over and over again. For example, when I was paying for parking at my job, I could pay $10 a month or $10 a day to park the meter, or I could risk getting a ticket, which was only $9, which was cheaper than the whole day. Well, what incentive did I have to plug the meter when the ticket was cheaper than paying the meter. And that's essentially what they've been doing. And as they do it more and more and more and get more sure, oh yeah, we can do this. It's a sure bet. We can do it. Like we all are going to strategically do this together. They put so many companies out of business and made so much money and no one ever caught on that they just do it more than they should. And that's how they're gotten into this situation. And they're using, that was a really big concern I had with Doge when Doge was going up. And it wasn't so much that Doge was going up, but it was how much the news media was talking about Doge going up and talking about Doge Day and promoting buying Doge. Because typically, if you're seeing news articles promoting a specific stock or cryptocurrency, there's usually a reason why. It's because they want to have retail put all their money into it, hold at the top so they can dump on them so they have more money to cover everything in their short position.
It's a trap.
And then, exactly. And it worked so well on the 420. Why not? Let's do it again. Let's let them run it all up to 73 cents and
Yes,
then let's dump it on them again. Yeah, it's like purposefully taking retail money to get more money to do short ladder attacks and short the shares more. Like, for example, there was a news article, I think it was this morning or maybe yesterday, and it was talking about how Melvin Capital got rid of their short positions back in March based on their 13F filings. Well, 13Fs don't report on short positions, for one. So, there's no way a 13F would show your short positions. It would only show the puts. And on top of that, they took out 6 million puts on their 13F they filed on 428. So they added 6 million puts to GME, and they said that they were out of it. And that was a news article that was read after I read the 13F filings where they just took out 6 million more Gamestop's puts. But once this liquidation happens, it's going to cause a mass effect on the rest of the stock market because that computer algo is going to kick over and sell everything off, which is going to drive that price down, which is going to cause FUD for other people. So they're going to start selling, and it's just a giant ripple effect. So it's likely to happen before or right around the crypto or around the proxy vote. But as you see, we've been following this wedge, and this date, May 21st at 8 o'clock in the morning, which is tomorrow, has been a date a lot of different people have came up with. And we're seeing that's right when this is breaking out of this trend of having higher highs.
Could I also mention real quick? This is also called not only the MOAS, but the what's the Mo? What?
Infinite short squeeze.
No, the wedge. It's called like the mother of all wedges.
Yeah.
So can I ask how the 21st was decided? I mean, I see the wedge, but I don't understand it.
So I had I had between the 17th, every time I would kind of redraw the wedge based on what had happened that day. I originally had it between the 17th and the 18th, and then this drop right here pushed it out till the 21st. And I have a couple other people who do technical analysis on other parts of the stock market as a whole, and they kept coming up with the 21st date as well. I mean, it's not a guarantee thing, but there's been a lot of indicators. So a bunch of us had taken all of the 13Fs and who held put positions on GameStop and who was potentially at risk of who potentially had the most to lose based on their 13F filings. We have no idea if they're actually shorting them, but we had a potential list of companies who would be hurt by this squeeze happening. And I came up specifically with the ticker NUAN. It's one that everyone on the list I had made had, I think between all of them, they held like 252 million shares of it. So I knew if they all get liquidated, that stock was going to drop significantly. And I had taken out a put call on it a couple weeks ago, like super out of the money. Like I just did like $8 testing theory on my Robinhood Play Money account, and it went up 21,000% 2 days ago, which was a good indicator that I was on the right track. Watching the crypto market fall to 37,000 was another thing that we were expecting, which is another good indicator that this was happening. Volume has dropped off. They have less and less to transfer between each other to drive the price down. So we're seeing volume go to nothing. So those are kind of the indicators we've been watching for this getting us confirmation that it's happening. But we also don't know whatever manipulation tactics they can use to drag it out farther and farther and farther. So they've spent literally since February, right in here, telling everyone that the short squeeze is over, so people stop paying attention to it and they sell their GameStop shares. Because if we sell the GameStop shares, that gives them more opportunity to sell back and forth to each other to artificially drive the price down. The other thing is in the options chains. They've been covering their shorts with the options chains because people aren't exercising the options. So they sell a call, people make their money off the premium, they can buy the premium back and not exercise it, and then just use that money all over again. So it is not a good idea to buy GameStop and AMC calls unless you can exercise them, or you're just helping them put the situation on a longer period of time.
Kicking the can.
Yeah. Did I miss anything, guys?
Nope. Spot on as usual.
So how about all of the new OCC and SEC rules and stuff that have been recently approved? How does that affect it?
So there was originally, and I'm not like super well versed on it just because I just not my expertise. The SEC had new margin rules and requirements. So you got margin called sooner, and that was supposed to go into effect, and then that got pushed out of another 45 days. So there are steps that we're seeing with the new SEC regulations, like if a brokerage goes out of business or gets margin called and they can't handle it. There's an emergency plan now in place to transfer all those accounts to a new brokerage that is financially soluble, which is new. So there's a lot of different signs that they know it's coming, and it's not a matter really of if, but more when.
Hey, Kyle,
But
real quick.
crypto taking is a huge, huge, huge sign because they're going to use their crypto liquidity before they're going to give up on their shorts.
I want to make a quick mention. I know somebody was about to ask a question. I do want to make a quick mention that it is not required that they file any of that I know of. It's not required that anybody with larger bags or anything or larger funds. It's not required for them to actually report their crypto positions. So you really can't tell who it is in and out of it. But you can tell by the size of the order and how much money is actually there.
So think of it this way. Say you had $1 million in Bitcoin but you were losing 2 million in crypto. But you and your friends have the ability to drive Bitcoin price up. So you drive the Bitcoin price up. Or let's use Doge, right? Let's drive Doge up. Doge is this dumb meme coin. Let's get everyone on board. We'll drive it up to an astronomical amount because we bought in at like 0.002. Drive it up to 42 cents. Everyone's excited that it's going to $1, and then we're gonna sell ours all off at 42 cents, and we just made a bunch of money, and retail just is left holding the bag. And it worked so well the first time, they did it again.
Sorry, somebody had a question. Was that?
I just said bags they totally could have put into GME. So do you think the crypto crash is directly related to this?
Yeah. If you think of it this way, okay? Say you made a play and it didn't go in your favor, and
Might want to get those pups in control.
I know, they're crazy. Anyone want them? Give me 1 second to go outside.
While she does that, I know she's explained I know the 21st came up as far as tomorrow being an important date or a date that got brought up, but there was also 2 others before that had meaning that actually I know that she mentioned before and pretty spot on. I was trying to remember how she got back to those 2 days and even tomorrow included.
Okay, so how we arrived at those dates were we saw repeating patterns in like the SPY in the crypto market. So when typically crypto markets go up on the weekends because all their day traders take their money out of the stock market and then they day trade crypto during the weekends. And so crypto is typically like a boom on the weekend, and then it comes back down on Mondays when they pull it back out to put it in the market. That's a traditional pattern. It's consolidates more or goes down during the week, and then it usually goes up on the weekends. And that's kind of been a consistent thing. So with shorting, so when you buy a stock, the most you can lose is what you put in. So if you buy GameStop at what, 170, the most money you can lose is $170. If you short GameStop at 170, the most you can lose is an infinite amount. Because whenever it goes above 170, that's when you're losing. That's why shorting is so dangerous. It's betting the opposite way, and you don't have zero as a break-even point or as a stop loss.
Essentially, by saying that is that zero stops. Zero is a stop, whether you set it or not. Zero will be a stop. However, it can go up completely uncontrollably up. However, zero stops.
So shorting has no built-in stop loss like buying does. Buying has a built-in stop loss at 0. Shorting doesn't. Shorting has a built-in stop loss at like infinity. So that's where the dangers of shorting come in, which is also why this is called the infinite squeeze, because you get to set your price you want to sell at. And there's also a reason why they don't let you put in market limits for more than 500% of the price. I tried to put in a limit on my GameStop at 429,000 because I know that's the price where it breaks the computers according to Berkshire Hathaway, and they wouldn't let me. Well, why are you not going to let me? If this is a free market, why can't I put in a limit at what I'm willing to sell my share at? It shouldn't be a problem if the price is never going to even come remotely close to it. And it's not a problem if those algos kick in and hunt for whatever any prices are for sale. But how we got those other
Webull
numbers?
canceled all of mine that I put in last Friday.
Yeah. Like the how we got on those numbers and how me and Fizzy were able to predict what was going to happen the week Doge dropped is because we saw the indicators of crypto tanking. Crypto tanking is an indicator that a GME gamma squeeze is coming. Now we just saw the biggest crypto tank, which means it's an indicator that we're going to probably get another GME gamma squeeze, if not the actual thing. And the last time, the only reason why we didn't have as big of a gamma squeeze as we probably should have is because everyone piled into Doge and they dropped Doge on everyone. And they had that extra crypto and that extra retail money to continue to screw us over.
It's not for the ETC movements and cheaper.
You're roboting a little bit. What was that?
So let's not forget the ETC movements that happen at the same time and cheaper.
You're losing
Yeah,
reception or something. Mike.
they're literally just making up coins now to get people to FOMO in so they can take your money so that they can prevent this from squeezing.
Kata, if you could you possibly go between the difference between a gamma squeeze and a short squeeze?
Not super my expertise, but yeah, it's basically they let it go up, right? So then people get scared up here at the top and they start selling, or it starts dropping and they start selling. So it's basically kind of like a bull. It's like a bull fake out to get people to sell, so they have more shares to drive the price down.
Is there a particular?
And they also play the other end of it too. If they get in a bunch down here, right? They've piled on their shares. They let it run up. They sell at the top, and everyone FOMOs back in up here instead of down here where you should have. But then they've also gained more retail money, and then they have more shares to short all the way back down. You have to think of things like institutions. Okay, if you have a position where you're losing a ton of money at and you need more liquidity in order to not blow up everything, you're going to sell your crypto positions. And if you're going to strategically sell your crypto positions, you're going to strategically sell them at a point in time where traditionally it's at the highest point of the week, which is on the weekend. Then you're going to get everyone scared. Everyone else is going to sell out, and then you can buy back in at the bottom again and do the same thing over and over and over again.
And keep in mind that this is not something that you have to file if you're a big player. You don't have to file anything on this.
You don't have to file your crypto. No. You don't have to file your short positions. You don't have to file your naked short positions. You only have to file your long positions, your calls, and your puts.
On your quarterly earnings report, a publicly traded company does have to report if they bought crypto.
But not the hedge funds.
If you're a publicly traded company. But yeah.
Right, but there's a lot of them that are not.
Don't think that at least Melvin and Citadel, I do not believe that either of those are publicly traded, but I could be wrong.
Okay, so the two outliers that stand out to me is that Melvin Capital and Maple Lane have put positions, but they hold no shares. So they're literally naked put calls, which means that they have the most to lose because we don't know if those puts are covered, or, well, they're definitely not covered if they're naked puts, or if they're just the contracts. We have no idea. Which means that those two, because they have no shares that they actually hold, are the most at risk, which is why I've been following those positions and what their holdings are the closest.
A quick like rundown. Naked, whether it be puts or calls, means they do not own the shares to cover it. Covered
Yes.
means they own shares that they can cover puts or calls with. That means they do not have to buy in the open market. They currently own those shares.
So yes, and I'll do a quick like option explanation. So there's kind of 4 steps to it. You have the person who's selling the contract. So they're selling a call. That means they have 100 shares and they are willing to sell those shares at the strike price. So if I put out a call position on GameStop that I'm willing to sell my 100 shares to you at $600, if GameStop hits $600 or above, well, let's do it different. Okay, I have 170. I will sell 100 shares at 170 if the price of GameStop goes above 170. So if the price of GameStop goes to 200, I have to sell you my 100 shares for $170 because that was the contract. But you paid me a premium for that option to exercise buying those calls at that price. And if the price stays below that 170 mark, I get to keep your premium and you're out the premium, and I also get to keep my shares. Now you can also do this naked. I'm going to say I'm going to sell 100 shares at 170, but I don't actually own them yet. So I'm only going to buy them if someone exercises that. And if it doesn't go to that price, I get to keep the premium and I also don't have to buy the shares. Now that you have the person who's buying the contract, the person who's buying the contract doesn't own the shares or that's not the point of it. They're buying the premium. So they're making the bet that they think the price is going to go above 170. They're buying the contract to buy 100 shares if the price goes above. So if the price then goes to 600, they get to buy 100 shares at that $170 price. And they're doing that at that $170 price plus whatever the premium they had bought that option to. Now the same thing goes with puts. If I have 100 shares of GameStop and I sell them, I put them up on the market at $60, I'm willing to sell my shares, or I'm willing to, I think puts always like kind of mess with me. I'm selling you the option to sell your 100 shares for $60. So I have the right to exercise selling my shares to you for $60, and I sell them at $60 if the price goes below that. So if you can do it covered and naked. If you're doing the puts, it's giving you, if you have the contract, you have the right to sell 100 shares for that price if the price falls below. But if you don't have those 100 shares to sell, that's a naked put. Because even if you're in the money, if you don't have shares to sell, it means nothing. You can't sell something you don't have. And that's when that is also how phantom shares come in to play.
I want to also make a mention as far as shorting stocks and stuff go. The perfect play if you're a hedge fund would be that you short the absolute shit out of a stock. The ever living shit out of it. Over leverage yourself on it. And that stock goes to zero and that company goes out of business. You now no longer owe to whoever you borrowed those shares from. You now no longer owe them shares. That company no longer exists at all. You get 100% of the profit. You do not have to use any of that profit to buy shares back to give back to the person that lent you those shares. That is exactly where we're sitting. The hedge funds that were shorting the shit out of GameStop expected GameStop to go out of business, so they did not have to spend the money out of their whatever they made to have to buy shares back. They probably did leverage the fuck out of them, so that way they could, be greedy as fuck. But
Yeah, because they've been doing it so long and never got caught. So, I mean, the more you do something without getting caught and the more money you make, of course you're going to do it if it's so easy. They just didn't expect COVID to happen and all of us to be bored and jump into the stock market and be like, hold your GameStop shares.
It's a factor that wasn't seen, but now it's a force.
I have a question for y'all. What's your price on GME if the short squeeze happens?
I would say that there's no real set price. I have heard mentions that we've heard before that there's mentions that a margin call probably won't happen unless we gamma squeeze up to about 800 a share. However, with everything that's going on and the things and the law and the rules that have been passed, we're starting to think that it's probably a little lower. It's really hard to put a number on things. If I could be honest, it's hard to put a number on things. But from the math that I've heard and the math that other people have actually gone through, there's talks that we could at least see 4 digits, possibly 5 digits.
Yeah, I got a
And
question.
It's one of those things you have to play by ear, because my concern with this Berkshire Hathaway thing is that the computer supposedly broke when it hit a certain number. And that number was 429,496. So I'm going to get out of probably at least half my position by then. So they can't pull the excuse that the computer broke. And that's my exit strategy. But it's going to be based on, well, it's going to go up and then it's going to come down some. And then the next margin call will get in and it's going to go back up. So you're going to have these ups with slight downs and then ups again. And that's just triggering the margin calls, triggering another one, triggering another one.
So in these margin calls, we're only expecting the price to go up because hedge funds are buying it. Because I, as a retail trader, I mean, I could buy 5, 10, 20 retail Tesla stocks, but once it starts going over 500, you have to have a large amount of liquid to purchase that. So in order for it to go maybe 4 digits, we're anticipating retail purchasing it, or the hedge funds covering their shorts.
As far as Tesla
so what's going to happen is the computer's going to take over. If they get margin calls, they need to be liquid. Liquid, like you're basically they liquid your account, be trigger to buy at whatever price it can. So the longer we all hold, the higher the price goes, because that algo is just going to hunt for stop. It's going to hunt for stop losses, and then it's going to go hunt for whoever's selling it at whatever price.
How do you put calls and everything on crypto? I've never done it before, so I don't know. Sorry. Like puts and calls.
I just future trade for the most part, and then hold GameStop.
Gotcha.
I don't have any other positions because I know them getting margin called is going to cause everything that they're holding long term to be liquidated, which means that those prices are going to tank with no fault to anything except for people making dumb mistakes without being held accountable, because there's no system in place to hold short sellers accountable. There's no way for you to get a short interest percent number that's anywhere remotely close to being accurate, because it's not reported anywhere. So all the numbers are always speculation.
I mean, to bolster your point, like Michael Burry, the big short, even he just started his short on Tesla, and I think it's lining up nicely to what everything you've just explained right now.
Exactly, because they're going to liquidate the positions that they're holding long term, which is going to cause a lot of stocks to fall, which is going to cause a major market crash.
I want to mention just here in the general chat, if you could, yes, I'm seeing that you're mentioning market cap. Tall, look up the Volkswagen short squeeze. At one point during that short squeeze, if I remember correctly, so correct me if I'm wrong. At one point, Volkswagen became the most the most what's the word
Valuable company.
thank you. The most valuable company on the planet because of it. Thank you for that save.
No problem.
Words are hard.
But yes, that's true. I believe I heard the same thing. That for a moment that they were.
Yeah,
and the same thing is happening to AMC. It's identical. The same situation is happening. It's just happening to both of them because those are the two that retail really latched onto and caused a huge fit over, which is why there were housing committee meetings with very odd titles that are like PR.
It also deals with the fact that they are brick and mortar, and a lot of people were shorting it because of COVID. COVID brick and mortars were not the highest, on the list of things to be investing in at the time. You would want to be investing in e-commerce or anything online, delivery, something like that. Brick and mortar was not where you wanted to put your money. That's why shorts essentially happened.
So what happened?
And regardless of a short squeeze, GameStop has really good people in charge now, and they have really good fundamentals of where they're going, and they have really good balance sheets.
Is my voice okay? I knew it was getting
go
rough.
ahead and ask your question.
Okay, so what happens if all this goes down as planned? A bunch of firms are liquidated. What happens to our economic environment at that time?
2008. Just kidding.
We're gonna see an economic crash, and we're gonna see hyperinflation, which is another aspect to it because we're throwing trillions upon trillions of dollars into our economy. Which the more money you see it with Doge. Like that's what Neat talks about all the time. Doge has an infinite supply and it devalues itself every day. The more money you throw into the economy, the less valuable the dollar is worth. So when you have so much money in there, your dollar is not worth as much. And so a way to protect yourself from inflation is to hold crypto and hold good cryptos. Hold cryptos with good fundamentals, good utility, and that have fundamental research behind why this would be sustainable for a long period of time. Doge isn't one of those. Doge doesn't have a development team that's not run off of a Reddit thread. Doge doesn't have a utility with contracts. Doge has a decreasing rate because more and more coins get added every day. There's literally reason only sustainable because that's what people were willing to pay for it. And then when it got dumped on them, it fell back to where it should have been.
Right. And
But
aside
crypto's
from
gonna
Doge, right? So I mean, and
the
I know there are right
dollar gets
there.
less. So if the dollar is being valued less, that doesn't mean crypto valued any less. So crypto is going to go up when inflation goes. Like it's like gold. Everyone put money into gold because gold maintains its value. It goes up with inflation. And so Gen Z use crypto.
So what about 401k stuff like Vanguard and stuff like that? Are we going to lose value in that as well?
If you have a stock market crash, that means
Now,
your stock
robotic.
the only way
Robotic.
to hedge against it is to hold
Did you
something
say-
that's not going to be affected. Like GameStop is the reason behind it. So GameStop's going to have, if in order for GameStop to go up, everything else has to come down.
Can you say the first part again? Sorry, it was kind of roboty, so I was not able to hear it.
Sure. Yeah, if in order for GameStop to go up, or when GameStop goes up, everything else is going to have to come down.
So do you think we should liquidate the 401k before then? Like probably, I don't know how long it will take, but do you think so?
I mean, I'm not here to make any this is just my speculation. This is my theory. This is what I think is going to happen. I could be completely wrong. But personally, I hold GameStop and AMC, and then I hold a lot of puts. And that's how I want to play it. I mean, eventually the market will recover in your 401k, but I mean, it recovered super quickly with COVID and it soared higher. So you gotta just that's why hedging is important. So because if GameStop continues to stay where it's at, everything else is going to stay where it's at. If GameStop spikes, everything is going to drop. And you're hedging that you don't care if everything else is dropping because you're making the money back with GameStop.
Right. But those of us that have Vanguard have always been told to, like, you know, set it and forget it. We're talking probably 15, 20 years for most of us. We probably should just leave it alone.
Like everyone buy Doge because it's going to $1, and then they go to $1. No, it came down really fucking hard.
You're roboting.
I'm roboting.
Yeah.
So bad, yeah.
Okay, hold on, let me switch to my phone. Goddamn Nebraska internet.
It's probably the Apple product you're using.
While she's doing that, I think that, like, I'm thinking of every single asset I have, which I know a handful of us have, you know, Vanguard 401ks or whatever. We were like, when we got into Vanguard, we were like, set it and forget it. Come look at it again in 20, 30 years and be surprised. So if the recovery is going to be as decent as what it sounds, I mean, Vanguard will be affected short term, but that's not what we're in it for. So we could probably just shake off that concern.
I have to mention this in our general. Tal, what do you mean they don't have to cover? The last I checked is you do have to cover shares that you shorted. Like I'm very curious. Like I don't see how I don't understand nor see how you can just short the shit out of it, but not actually have to cover your shares nor pay them back to whoever you borrowed them from. Somebody's gonna come asking for them. I really don't see. I really don't see your argument, honestly. I mean, I'm willing to see both sides. I mean, I'm being realistic, honestly. Like, yeah, I see that you put 1,500. Like, yeah, that's realistic in my opinion. But they still have to cover your argument that they don't have to cover. That is wrong. Somebody's going to come asking for their shares back.
Can I speculate for a moment? I think even if they want to, they'll just file for bankruptcy, and then it'll become an issue of the state having to pay those or some insurance provider to go ahead and recover the stocks for whoever it belongs to, or the money.
I think somebody's eating with an open mic.
Yeah, I hear it too.
Actually, I think Scarf.
So correct me if I'm wrong, but originally the DTC, they originally covered the partners when something like this happened. And this new rule is specifying not only they're not going to do that, but that they will promptly liquidate. Is that what I understood when I read the new rules?
Sorry, what was that? You're kind of slightly roboting a little bit too.
Yeah, it doesn't seem to be stable. Am I okay now?
Still kind of taking a little slow. Take it a little bit slow. We might. I think we'll be all right.
So the new rule that was passed by DTC, from what I understood, they used to cover these failure to words. Sorry, the failure to purchase the shares, right? And what the new rule has stated is not only are they not going to do that anymore, but they have put in rules that they will be promptly liquidated, and not just members of the DTC can come in and auction, to participate in the auction, but now non-DTC members can come in and do so as well. So basically saying that you're fucked and we're going to sell to the highest bidder regardless. And did I follow that rule correctly?
Sorry, guys, I just got back on. What were you saying again?
Oh, no way can I say it a third time. It's cool.
Sorry. So with your like 401ks, like you're not going to get your positions aren't going to get liquidated. Like you're not going to get margin call.
Yeah, no, I was way past the 401k. I was on the new DTC rules.
I'm not the best person to explain those.
Because it seemed to me that DTC was no longer going to cover this bullshit. That's what I thought I read, essentially.
Yeah, they put tighter margin restrictions on them, but it got pushed back 45 days.
From what I understand from one of the rulings, cannot pinpoint which one it was, is that it would try to. I think it was supposed to try to spread it across the market, so that other hedge funds and the likes would probably have to cover before DTCC. I could be very wrong about that, so definitely double check that.
I feel like that was OTC's rule number 4, and they opened it up to all bidders, not just members.
In addition to that rule of the OTC, also, if you're just trying to take advantage of the option market and you don't have enough to exercise your contracts, you'll get liquidated before it goes up too high.
Yeah, options, unless you can exercise your options, especially on things that are potential for squeeze. Sorry. You're best not playing options and just buying shares. But to answer, like, okay, so your 401ks, if you go back and statistically look at what happened in 2008 when everything crashed, it came back up and it came back higher. So if it's a long-term hold, even with crashes, unless it's like is something that you're going to need in a relatively short amount of time, it's eventually going to recover. But this is also going to cause the major regulations in order to prevent stock manipulation with naked shorts, and they're going to be forced to find a way to prevent things from being naked shorted so much that it's artificially driving companies out of business.
I mean, yeah, and 401ks are usually held with a different and broker, and they're FDIC insured. And the more I thought about that question, the more ridiculous it sounded. So I'm cool with that.
Like your positions aren't going to get liquidated, but you're probably going to see a major loss, and you'll just have to wait for it to recover.
Yeah, I don't have a problem with that.
The other option kind of just depends on if you manage your 401k or if someone else manages your 401k. Like a couple options you have, if you start to see the start of it, you could sell at the top and then wait for it hits the bottom and then buy back in again. But you got to be on your game in order to pull that off. And for some, it's going to be easier just to ride with it.
Yeah, no, I have it through my employer, and it's 5% vested. So I definitely want to keep it there for sure. 5% matched and fully vested is what I meant.
But sometimes, even though you have it, you can still have control over where your positions are. So, like, I have a 401k, and I threw all of mine into the mutual fund that had the highest percentage of shares in Gamestop.
Vanguard, right?
I think mine's principal.
Hey, what will be the ticker for that you have for mutual fund?
So all of them are different. I know me and Fizzy were looking at it one day, but I don't know. But you should be able to look at the mutual funds that you have the option to buy into. And it should tell you what their current positions are.
Okay, thank you.
If I could add some more data to this. So the AMC vote was moved for June 2nd, and the annual meeting is moved to July 29th. So those are some time frames that, additionally to what Kata mentioned, the 21st lines up. That would be one catalyst. Then in the upcoming months, you have a few more catalysts. So personally, if I'm going by the theory of buy the theory, sell the news, that's the reason I got in heavy this week, because I'm betting that it'll happen sometime soon.
The other things you guys can look at is so the percent of the market dropped was like 50% for the 2008 housing crash. So it's it's feasible to think that we're going to drop another 50% this time. So it's going to be a larger amount, but it'll still probably be close to that 50%.
Whoa. Encore. Encore.
Anyone else have any questions? That's kind of the basis of everything we've kind of went over in the last few months and witnessed, and we're seeing those those indicators play out, and it's just kind of a matter, it's not my opinion, it's a matter more of when than if.
Would you mind? Do you mind sharing what you're holding, Kara?
What I'm holding, I'm holding GameStop and AMC, and then some puts on potential positions that I think are going to have the most effect based on DD.
Yeah, that's what I've been trying to strategize, but more so puts on GameStop than AMC.
Oh, I don't hold puts on GameStop or AMC. I hold puts on the positions I think I'm speculating that the people who are most at risk are long on.
I see. Tesla.
So is there is there a trigger that's gonna set this off? Are we waiting for a certain price for it to hit, or is it just when they decide to? Fill me in on those. What caused the other two spikes to hit up versus what we're waiting on?
So what's gonna probably be the trigger is there's a couple potentials. One, someone gets margin called and liquidated, or two, the GameStop vote comes in. It's just they run out of liquidity to keep dropping crypto. We don't know exactly what they're holding at this moment and how much they're able to play with. So it's kind of a combination of a lot of things. And the AMC proxy votes and the GameStop proxy votes are kind of like the final straw. Like, that's going to show, if everyone went in and voted, it's going to show that there's way more shares out there than were issued, which is going to be, it's going to cause the SEC to step in and take the situation. And they can't just like get rid of those shares. They have to buy them back. And if they sold a phantom share and they buy that share back, it's not like they can then sell it again because it didn't exist in the first place.
Personally, I won't be derailed if it doesn't happen in June, July, August, because come their next earnings, I believe in September, and the economy is opening up, they're gonna post, I believe, to be great revenues. So my bet is all the way till September as well.
I'm gonna mention it like I mentioned in the general chat. At the end of the day, it's a ride you don't have to ride. If you don't feel like you want to put your money into it, don't. Nobody's forcing you to. Nobody's telling you you have to. Ride it if you want. Ride it if you don't. Just make sure that if you're on that ride, make sure you're comfortable with losing it. If that becomes a possibility.
And make sure if you are holding GameStop shares, do research because you're gonna get like the trampoline effect where it goes up and then it's gonna come back down and then it's gonna go way back up and then it's gonna come back down and then it's gonna go way back up and then it's gonna come back down. And so you got to feel comfortable when to get out. And I personally, I'm not going to get out all at once. I'm probably going to sell one share and then I'll sell another share and then I'll sell another share. So I'm locking in those profits. But if the algos are taking over, they're going to hunt stop losses. So I personally am not going to have any stop losses in place because it's just as easy for it to go up and grab those high market limits as well as it is to go down and grab those stop losses because it's not like there's going to be enough volume on the sell side to keep it at a steady level. So you might see like crazy action. So like you might see it go all the way up to 1,000 and then it like there's no volume so it drops down and hits up a $500 stop loss and then it jumps all the way back up.
I'll say this too. I think it's a combination of a lot of different things that are enabling this. But one of the things that is a big driver, in my opinion, is the ability for people to get engaged into the stock market because of COVID, learn, submerge themselves in it, explore, which is beautiful.
Yo, you guys are awesome.
Everybody's awesome.
All right, guys. Well, I need to get some stuff done and go to bed so I can be up in the morning. And I guess I have to go. I gotta do crazy stuff tomorrow too. So I appreciate all of you guys for jumping on and wanting to listen to me and people who donated. It's the best because I really need it right now. And hopefully in the next couple days I can go through more of my how I do TA and how I look at things and how I kind of research on come up with weird plays that have like 21,000% gains. Thank you, Kata.
No, yeah, thank you, Kata, for sharing your theories, your ideas. It's always appreciated very much.
Again, and this is speculation. This is a theory. It's what I believe based on the research I've done. That doesn't mean that I'm 100% accurate, and it doesn't mean that I'm 100% wrong either. This is just what I've absorbed and researched myself, and these are the conclusions I've came up with.
We appreciate nonetheless, honestly.
Yep.
I appreciate your time and the time that you put in to learn this and the time that you're giving us to go through it.
And so does your shower. Your shower appreciates that very much.
Good job, guys.
Yes, I take my phone in the shower a lot to make trades.
You must have a hell of a hot water heater, not gonna lie.
Also,
Wait,
can get
you
shower
guys
trades.
haven't been in the shower the whole time too?
Oh.
I only make trades in the shower and talk on Discord. Actually, I don't talk on Discord in the shower. That's reserved for someone else.
Hell yeah, I like your style.
I'm a toilet trader.
Oh man, I smell a new roll. Wait a minute, that was the wrong word.
Ha ha! This is like bathroom traders, honestly. If you don't trade on the toilet or while washing your hands or, in the shower, are you really trading right?
And while we're at it, if you're listening to this on YouTube and you want to follow along with the AMC GME school, God damn it, like and subscribe. Rockets.
Okay, let's keep the rockets on the launch pad for right now. Let's just keep them there for. Let's let them fuel up a little bit more, all right? 43.
All right, guys. I will see you guys all later, and thank you so much for everyone who donated to me because I need it at the moment. And I'll see you later.
Good night, Kata.
Good night, Kata.
Night, Kata. All right, so where's the hookers and blow, right?
We can arrange that.
I was
Come on
promised
over to
hookers
the
and
film.
blow. I'm kidding.
Still live on YouTube. Hello, YouTube.